Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is February 23rd, 2020, and this is the Moniology Uranium Sector Review. This video will be available to the general public, and one of the reasons for it is because, frankly, our website is having some issues, so I'm uploading everything to YouTube, so enjoy while it's available. And it's going to be relatively brief, and throughout the week, we'll probably be posting a couple of premium videos once the website is back up in the PM space, uranium, and so on. But if you guys, as I mentioned in the previous precious metals video, if you have a uranium sector stocks that you'd like me to cover, send me a private note to dave@moniology.com, and we'll certainly cover those for you. But without further ado, let's have a look at the uranium space as I see it right now. We haven't covered it for about 10 days, and frankly, it's been a train wreck. I hate to say it. Most of the sector has not been performing well, but there are some green shoots, and I do want to cover those in this video. I still believe that, and I have this on Twitter, my Twitter feed, that uranium will be one of the best performing sectors in the marketplace, and in 2020 and beyond. And you'll see why I believe that we're very, very close to an upside breakout. But it needs a catalyst there. The sentiment is absolutely dirt poor right now. And until that catalyst happens, then we'll probably continue to see decay in especially the smaller names, and not much to write home about. However, I read a couple weeks ago that it's possible that Nuclear Fuel Working Group uh, resolution might be published on the 24th. It could be completely wrong, which would be Monday. But if that's accurate, or if it happens any day in the next couple weeks, I think that certainly would change the tone of the sentiment of the sector. But yeah, it's been a pretty nasty couple of weeks. So let's have a look. We'll cover the sector from various different time frames, starting with Uranium Participation Corp, U.TO. This is the kind of barometer for the price of uranium. And so here's what I'm seeing. You've got the higher highs or lower highs, and well, you've got this trend line here. Let's put it that way. You've got a trend line here that's been developed four times that this trend line has been hit since basically November of last year. That basically was the beginning of a pretty steep decline in the uranium equities. So in a time when basically uranium's equities are relatively bullish. And this was because, I mean, largely because the Nuclear Fuel Working Group was delayed again for about 90 days. So here we are, about 90 days later, and I just want to point out the last time there was a delay in the Nuclear Fuel Working Group, we were around here. So that was the first delay. Now we've got the second delay. Bottom line is we've got a coiled pattern here, and you see that we're very, very close to potential upside breakout here. Hasn't happened yet, so until it happens, there's no breakout. But there's the trend line with four very, very distinct lines of resistance, and you've got the 50 RSI right above it. If this breaks above it, that would be a very, very positive bullish sign. What I will say is that we've hit this low of around 370, 380 area a couple times, and every single time we've done that, we've done it recently with positive divergence. So that's a very, very positive sign that these declines of late are not necessarily because of strong negative momentum. Even though the sentiment is very poor, momentum is not following suit. In fact, if you look at it from a different level, PPO is not making new lows on these new attempts at breakdown. So that's a very positive sign. I think at some point in the very near future, I can't say if that's weeks, days, or months, uranium is going to really start outperforming the rest of the equity space. We'll have to see when that happens, and we'll certainly be covering it very, very closely to both the public, but especially our premium members. Uranium Participation Corp, here's the weekly chart, and kind of here's what we were looking at on the daily chart. This over here is much cleaner right over here. So that's kind of what we're looking at right now. So to me, this is a bullish wedge. And every time, and we've already broken above the trend line from a weekly perspective here. And although we couldn't break the 50 RSI, we had a fake breakdown here, and now we're back above it, back above the 38 level of RSI, serving as support. Now you've got a couple of 13 and 26 EMAs still ahead, serving as overhead resistance. But if those can break, this can be a very sharp move to the upside. And you can only imagine what the uranium equities would do if these broke to the upside. We're talking 50 to 100% moves on the juniors, and on the more speculative miners, we're talking probably 200-300% moves before anything even started to start cooking, if you will. Here's the monthly perspective and why I'm so bullish. Here's the downtrend that's been in place basically since 2006, right? And you've got a very clearly defined downtrend here, hit multiple times, and that was actually broken back in 2018. In fact, this reminds me a lot of what happened in precious metals in 2016, and I can show you that just to give you a comparison. Why don't we do that here? Just I'll show you the price of gold here from a monthly perspective. So we're going to take a look at the GLD. And I think this is very, very important to understand why certain things happen. So back in 2016, gold was in this downtrend right here, and it broke out. It broke out just like uranium did. Uranium did in 2018. It broke out of this downtrend. Now going back here, what happened? We had this nice rally, and then we just fell back and we almost hit I mean, basically we double bottomed here back in 2017. So what's happening right now? We basically double bottomed 2 years later after the initial breakout. That's kind of where we are right now. And what happened here, when you look at it, you had this bullish. Let me clear this up just to give you some perspective. You had this kind of a bullish wedge pattern here, and then then you broke out, and then you kind of back tested it again, and then eventually, just recently, the gold finally break out. So it takes time to break out, but the bottom line is that the downturn was over, and I can say with certainty, a high degree of certainty, that the downtrend is likely over in the price of uranium. What we're looking for is an upside breakout above these 9 and 18-month moving averages around 410 to 419. Very close, but it needs a catalyst. And if that catalyst comes, I think that the uranium equities will be a coiled spring like you've never seen before. If you think the precious metals equities are starting to rally right now, you hate to see nothing yet. But again, it needs to really break above the $5 range before I would back up the truck to the point of very high confidence. And it's actually good timing because my precious metals portfolio is doing incredibly well. This could be a good time to sell some names over the next coming weeks and months if uranium's starting to pull up. Take off. Bottom line is there's still a lot of risk in the uranium sector. Obviously, the equities have not performed well, and now is a good time to start looking at names or continue buying at the bottom. But at the end of the day, you're buying in a very, very contrarian play. It's not a technical play right now. When it breaks, when the price of uranium based on Uranium Participation Corp breaks 5, that's when you're going to have a bullish trend. Until then, it's not there yet. All right, so let's take a look at some of the names in the sector from a couple time frames. Next Gen, I picked these names for a reason because they're some of the stronger names in terms of fundamentals in the sector, and so they track the price of uranium a lot more closely. So here's what I see. I see a downtrend all the way back to 2016. And it seems like we're just consolidating and waiting for that breakout here. Right now, what I do see is a fake breakdown potentially. So lower lows on the price. Momentum did not make a new low. That's a positive divergence. If this can break back above the 13 and 26 EMAs around 155 and 165 around here, that's your trigger to go long because this is going to be a very explosive name. PPO has not made new lows. It's a very positive sign here. So a lot of positive signs from momentum standpoint, but obviously price has not followed suit. So let's take a look at the daily chart of Next Gen and see if we can identify some clues. So again, positive divergence. Significant. Well, I can't say this on the daily chart. There's that much positive divergence. We made a significantly lower low, and momentum did break below the 31 level, but not by much, and then it rallied quickly thereafter. To me, this is a kind of like an inverse head and shoulders. And notice that we're creating higher highs on momentum. And if we can just cross that 50 RSI level to the upside, then that could be your trigger that you'll need to break these moving averages that are serving as resistance. But bottom line is, you've got you need to break basically 155 to 165 to get bullish, but there are some positive signs. Here's Energy Fuels weekly. So another one that kind of broke down this. So just to give you some perspective, this is the rally it had when the Nuclear Fuel Working Group was originally expected to announce right here. It didn't announce, and really broke down. Then it started to rally again with the idea that the Nuclear Fuel Working Group back in November was going to announce. Didn't announce, broke down. Well, now you created a lower low, but notice here we're creating positive divergence. Lower low, but momentum is not making new lows. PPO is not making new lows, and so while I can't say for a fact that these lows will hold, I think that there's a high degree of probability that they will. I could even see a breakdown here like this, a fake breakdown to about 128 area, and then break and move higher. But bottom line is, momentum is building to the upside, and although you can't see it necessarily day to day, if you step back, you are seeing some positive signs, and that's something that I look for. And here's the daily chart again: double bottom, even lower low in price. Momentum is not making new lows. Now, it's not to say that it won't, and it can't, but it's interesting, isn't it? And here you have the previous lows at 150. Momentum was much lower than it is today. Excuse me. So PPO is not making new lows to previous levels. So bottom line is, right now the company rallied really nicely and then funded here. So this particular drop was based on financing. Now it's well funded. The risk of new financing is not around for the next couple of months, if not years, probably. So any trigger to sentiment change in uranium, and this can skyrocket. So definitely want to be nibbling here if you haven't already done so. All right, so Cameco is the major player in the space. Let's take a look at Cameco from a weekly perspective first. So Cameco is double bottomed here with very, very positive divergence. That's your first sign. Second sign is it broke above this downtrend here in momentum. And this downtrend that's been in place since 2018 is now broken from a momentum perspective. Now we're struggling at the 50 RSI level, so we pulled back. But I think Cameco, which is the leader in the space, looks ready to run here. And PPO is positive right now. So I'm seeing some very positive signs here from Cameco, and I think this is going to bode very, very well for the overall sector. But this is the name that you want to own with the lowest amount of risk in the sector. Here's Cameco from a daily perspective, and notice we broke above the 50 RSI level here, and we had a really, really nice move from the lows of 8 to a high of 959. Now we had a couple of pullbacks, and the pullbacks, the most recent of which is what typically happens, broke below the various moving averages to shake people out, and then rallied with a hammer pattern, so closing at the near highs of the day. We also rallied at the 50 RSI level. So to me, this looks like it's going to be ready to run very soon. Of course, nobody knows, given what the overall equity markets, if they're going to start showing weakness, if they're going to push down the uranium sector. Obviously, that one can impact the other. But just from a technical standpoint, looks like support held, and the next price level that I'm looking at is a break above 960 to the upside. A couple more names. Denison has been starting to act stronger, and even though we made significantly new lows in price, and momentum broke below 31, it actually rallied very quickly thereafter. So that, to me, that's a fake breakdown potentially. And now you've got the 13 and 26 week moving averages that you need to break above. But again, for me to go long, I want to see this above that 45 level and hold. But PPO did not make new lows, and that's a very positive sign. Positive divergence needs to hold that 38 level and break towards that 50 level soon. Here's the daily chart. So the daily chart can be looked at one of two ways. On the one hand, it's starting to build some momentum here. On the other hand, this could be looked at as a bearish flag. So we'll have to see if this can break to the upside. Very positive sign. If it breaks lower, obviously negative sign. But it's above the 50 RSI level with very strong positive divergence. momentum is higher at 39 cents than when we were at 42 and frankly 48. So that's a positive sign. It needs to hold this 50 level and then break higher. So that's what we're looking for with Denison. Now, finally, the only name right now that looks really, really strong from a technical standpoint on the more speculative names is Plateau Energy. This is a lithium uranium play in Peru. I just want to point out there's a very interesting inverse head and shoulders taking place, and I really like what I'm seeing. And bottom line is momentum has already broken the downtrend from 2018 here, and it seems to be on the verge of breaking out above the 50 RSI level. This can pop and soon towards that 40-cent level. And if there's any positive resolution to the kind of the political dispute going on, which very likely there will be a positive resolution, it's a question of when, this can skyrocket and fast. Certainly back towards those 74 levels before the news broke. And also just to give a bonus to we will be sending out we'll be uploading our technical breakout sector stocks, and I want to just point some of those out to you guys. There's Garibaldi, PLG, Grid Metals, and Forum Energy Metals. Those are four names that are really looking strong right now, and you definitely want to look at them if you don't already own them for your portfolio. We'll be covering those in future videos. We've covered them in the past, but we'll be posting those charts on the technical corner on Moniology.com. So stay tuned there. Have a great week. Let me know what you think. All the best.